Pairing as a strategy. When we started a PMS, we started with a conservative product called Solitaire. We didn't invest in financials, we didn't invest in leverage companies. We generally bought companies with low or no leverage and better operating metrics. We wanted the risk levels to be kept low. But India as a market is very heavily financial dependent. So if we make an investor not invest in financials at all, then there would be times like the present when it would appear that the investor is not participating in a market rally. Personally, it's perfectly all right for me not to participate in a market rally. As a matter of fact, in every bull run, my portfolio would not have participated in the best of the bull run. I would have made all my money before the bull run. That is because the kind of stocks we invest in would be value driven, and the process of value discovery is what gives us the wealth. Whereas the last crazy expansion in PE may or may not happen in our portfolio, most likely not, because we are not buying fancy themes. Financials always catches the fancy of the market and leads to an expansion in PE around the peak of a bull market. So we don't participate in them. But investors may have a need to have a more economy specific or an economy related portfolio rather than a bottom up stock portfolio. The subsequent products we created, like True Blue, is an economy specific portfolio. We created it exactly for the investor who also wants to participate as much as the economy gives him opportunities. And we priced it as a fixed price product much cheaper than Solitaire. The concept was that those who want to have a blend of a conservative portfolio and a portfolio which is more economy centric can pair those two products. Then we created a multi-asset product. Why did we do this? Because when a bull run ends and then you have this sharp fall in the market, most people don't have a stomach for seeing that in their portfolio. So how can you keep the investor protected on the downside? The only way you can keep an equity investor protected on the downside is to take money out of equity into a safer asset class. There is no other way. So if we had a multi-asset product, then we could always protect that investor and take some of his capital to a safer place. Always keep some capital in a safer place so that when the market falls, we can invest in equity for him. Because in several market falls, investors don't have the stomach to invest fresh money. They feel the market will fall even further. Or they are looking around to see what their peers are doing, nobody is interested in investing, so they say, why should I invest now? But they need to invest when the market falls, because that's where you make the money. So we created this multi-asset product. But interestingly, this multi-asset product was not created when we started the PMS. This multi-asset product was started when I got into the investment world as a professional and started iThought. iThought was all about multi-asset investing in the first 10 years of its existence. Not many people understood that. And we didn't market it that way. I was using multi-asset all the time because I found that my investors wanted the upside but did not want the downside. People will say, oh, I want high risk, but not on the downside. So, when the market goes up and stays irrational, or when I find the market expensive, I ask my investor to invest in the multi-asset. Because we can manage the investor very well first. Second, the product can be managed exceptionally well because you have more choices. Suppose I have to invest only in equity. It's very difficult to invest in equity in a market where you don't find valuations to your taste, to your liking. So, we created these products keeping the investor in mind, not marketability. In fact, it's very difficult to market them when we started because all the PMS products had financials in them. We did not have. And this product was our main product. No PMS was selling a multi-asset product. And we were almost the only one. Even in the blue chip product, we didn't include small caps. Every large cap mutual fund has got small cap in them. We kept a pure large cap portfolio because we wanted to be true to the concept and label. But we created all this with a reason. If somebody has 1 crore, we wanted them to have 2 strategies so that they get a lot of peace of mind. In a rising market, solitaire will perform very well. But the investor wants to invest money in a rising market. He can invest it in the multi-asset. In a falling market, the multi-asset will perform very well. But if the investor wants to invest money, he can invest in solitaire because you find the opportunities there. In any market, if the investor wants to invest, he can invest in True Blue. Because there, we are more or less betting very close to the Nifty. And we are keeping out the companies which we believe the investor should not be investing in. And there are several companies in Nifty which are not investment worthy. Keeping away from them matters. Now, as a concept, we make an investor put 50 lakhs in one product and 50 lakhs in another product. We pair the 2 products. As the investor goes along, he keeps on investing every month. He chooses to invest in the product where the opportunity is correct, not blindly in one product. So, his allocation of capital happens in the right product all the time. And this is very important. This is very important to us because we want you to get the right outcome for every investment you make. This is very important for you because you want to be sure you're investing in the right place. And over a period of time, the product which has shown that it can take in more capital and the opportunities are more, will perform better in the subsequent phase. So, you will be contributing to a product when it appears that the product is not performing well, but that product will be showing opportunities. And then that product will perform. But when it performs, you have to look into the product where the opportunities are there. And this is where pairing gives you choice to deploy capital. And this enormous choice basically gives overall stability to your portfolio. Sometimes people don't stop with a pair, they add a third. So they create a trio of portfolios. When you do that, you actually become even more safer and conservative. You have more choice to deploy your fresh capital, your incremental savings, your bonus, the money from your ESOP, the money from sale of some land plot which you disposed of. All this capital can be deployed very carefully and correctly to create long-term wealth. The purposing will be perfect. I believe that purposing of capital has to be perfect. And let me share a personal detail. What I have seen with people who bring in one-time capital, that is from sale of land, sale of house, inheritance, ESOP, severance package, all this money, is that they tend to take that money a little lightly than they would of their regular income. I don't know why. They do a lot of things with the money, but they don't take that money seriously. They don't think that that money can be purposed to create something even bigger. I think when you think like that, your wealth creation changes, your whole outlook changes. You're very, very serious about what you're doing. Even people who get thousands of crores of money from sale of a business tend to become flippant with it. This is human nature. And this is something I am very bothered about personally. Because someday if I sell a big business, which I invested in, let's say in private equity or even as a equity market investor, I want that capital to be more productive after that. I am not looking to keep that capital earning 6%, 7% for me. I want to be prepared to deploy that capital in an even better place. When we started a firm, when we started a PMS, when we started ithought, when we got into mutual funds, at every point in time, the question that we ask ourselves is our firm ready to deliver this value proposition to the client? Are we improving ourselves constantly to serve this client? And thankfully, the answer so far has been yes. Hopefully, that answer remains a yes. And hopefully, we do work with more of you in purposing your wealth correctly, in pairing your capital in the right products, and in giving you an investment experience that gives you enormous peace of mind. Thank you for watching this video.